Hi, this is Linda Eedes, and today I'm going to give you an update on the RECM Global Fund, particularly looking at the year-to-date performance, as well as some of the actions that we've taken in the portfolio and the positioning of the fund currently. Looking at performance first and foremost, it's nice to see a bit of a recovery in the performance year-to-date. The Global Fund is up almost 15% in US dollar terms to the end of April. And that's against a backdrop of the MSCI All Countries World Index in US dollars, which is up just under 2%. So the global market is fairly flat, but we've seen a huge recovery in some of the more cyclical parts of the market, particularly resource stocks, which, as you know, there is a quite significant exposure to within this portfolio. In particular, the top three stocks which rallied during that period of time were Anglo-American Platinum or Amplats, and Impala Platinum or Implats as it's known. And all three of those stocks actually were up more than 100% in US dollar terms during the first 4 months of the year. So we're coming off a low base. We do still think there's considerable upside in those shares, which is why we continue to hold them. But certainly nice to see a little bit of a change in the tide there for resource stocks. I must also add that that's not on the back of really any fundamental change in the companies themselves. They're still facing very difficult circumstances. And I think it illustrates the point that when stocks are inordinately cheap, often you see a re-rating before the fundamentals actually turn around, when the market has just been overly pessimistic and in actual fact expectations start to shift and the market starts to recognize that perhaps things won't be as bad as was expected initially. So we still think there's quite a lot of room there for the resource stocks to perform well. Other parts of the portfolio which did well during the first 4 months of the year were some of our Russian stocks. So in particular, domestic retail bank Sberbank and the energy producer Gazprom as well. So it's quite interesting to see that in spite of a very difficult economic landscape in Russia, companies like Sberbank, which as mentioned is the biggest domestic retail bank, have actually benefited from the negative climate in their economy, with a lot of customers shifting away from the smaller banks to Sberbank and them coming out with much better numbers than was expected. Other parts of the portfolio which have done well are the retailers. So a little bit of a turnaround, slight rebound in companies like Tesco and Morrisons, which are two UK retailers which we have in the portfolio, as well as the US retailer Coach. So a little bit of recovery in those stocks during the year to date. But all of those stocks still incredibly attractive in terms of the price relative to what we compute to be their fair value. And you'll see many of those names are still in our top 10. So looking at the positioning of the portfolio currently, you can see that the portfolio still has quite a significant chunk of cash. It's actually standing at about just over 30% cash in the portfolio. And that reflects the fact that high quality businesses that are cheap, that you can buy at a discount to the intrinsic value, are quite rare in this current market landscape. Obviously, a lot of quality businesses have actually rallied quite substantially over the last few years and are not cheap at all. And of course, we don't compromise on that principle of buying businesses when they are trading at a discount, no matter how good the actual underlying business is. But the good news is that the market has actually provided some opportunities to increase that equity exposure. And you can see that our equity exposure is just under 69%, and that's up from about 60% at the end of the year. So we have been able to deploy some of that cash into opportunities in high quality businesses which have become cheap. And some of the new stocks which we've introduced into the portfolio include X5 Retail, which is the second biggest food retailer in Russia, and Chinese e-commerce business JD.com, as well as the airplane and marine engine manufacturer Rolls-Royce. All three of those businesses are actually looking very attractive for various reasons specific to those businesses, and we've introduced small positions to each of those three. In terms of the top 10, looking at the makeup of the top 10, which as you can see makes up just over a third of the portfolio, you can see that it's quite a nice mix of both resource stocks as well as some industrial and financial stocks as well. So about a year ago, you would have seen that 7 of the top 10 were resource businesses. Given the fact that the market has become cheap in various different segments over the last year, we've been able to diversify the portfolio more. And you can see we have, as mentioned previously, Tesco, which is the UK retailer, top of the list. The new CEO, Dave Lewis, is doing good things there, and we've seen some positive fundamentals already coming out of the business. The market is still taking a very short-term view on that business itself, as well as the investment holding company Berkshire Hathaway. That's of course Buffett's investment holding vehicle. We actually shifted some of our financial sector exposure into that business, which has come down to the price to book multiples that would typically see Munger and Buffett actually buying back stock. So given that they do have a lot of exposure to the financial sector, we thought we'd take that exposure through that vehicle, with of course the excellent capital allocation abilities of that team on top of that. You've got Standard Chartered, which gives you some exposure to the emerging markets, which have become very cheap. Then you've got, of course, your resource businesses, BHP Billiton, which is the highest quality resource business we own in the portfolio. We've been given the opportunity to increase our exposure to that towards the end of last year, with that business finally becoming cheap. We still retain exposure to Anglo-American and Implats, but also have Serco, which is an outsourcing contractor to governments globally, and Coach, as mentioned previously, the US retailer. So looking at the portfolio in total, the market has provided us with the opportunity to diversify the portfolio more, which is always a good thing. And what we left with is a portfolio which has a very robust value component, as well as a sizable cash component, which is very useful because we're able to put that to use as opportunities arise. Thank you very much.